Hello fellow traders, welcome back to our channel where we learn the intricacies of trading and financial market. Today we have a special topic, and this is fair value gap. What is it and how can you use it for successful trading? Let's figure it out together. So, what is fair value gap? This is not just a candlestick formation. It is the key to understanding price imbalances, and I will tell you how it's formed and what signals to look for and how to enter the trade correctly. If you want to improve your trading skills, stay with me until the end of this video. And of course, do not forget to subscribe to this channel and click that notification bell so you won't miss any of new videos. Let's get started. So, what is a fair value gap? In fact, this is a candlestick formation which shows us that there has been an imbalance in the price due to strong impulse price movement. This imbalance must be filled in the future, and that means that the place of the imbalance, demand zone, is formed, and reaching which the price is likely to make at least one rebound in the same direction. Let's see how a bullish fair value gap is formed. In fact, this is a formation of three candlesticks of green color, where neither the bodies nor the shadows of the first and third candlestick overlap each other. It's the zone that is called the fair value gap. This shows us that the imbalance has formed at this level, and returning to which the price is likely to bounce up again. With the bearish fair value gap, the opposite is true. Three red candles where the first and the third do not intersect with each other, shadows or bodies. From this fair value gap zone, we expect the price to go down. Unfortunately, knowing what a fair value gap looks like is not enough for profitable trading, as you will face the fact that quite often the price will ignore your level and pass through it. Therefore, before entering into the transaction, we will need to receive a series of confirmations. And the first thing we need to understand is whether we have a valid fair value gap zone or not. Everyone who participates in my project has long known how this is done. I have created a free online academy for new traders. There you will learn all about technical market analysis, indicators, as well as price action. All students receive full access to the course, as well as constant support from the supervisor and even from me personally. So text me on my Telegram and join the ranks of successful traders. The first sign of a valid zone is the fact that the zone has not been tested before, since very often the fair value gap zones are one-time use. So in this case, when we see that the next candle has tested the gap level, we no longer wait for a second rebound and automatically can say that the zone is invalid. Ideally, the graph should look something like this, and after the gap is formed, the price continues to move and smoothly returns to the level to test it. The second confirmation that we are working with a fair value gap zone is that the impulse upward movement during which the gap was formed should be accompanied by a breakdown of the structure. If you've seen one of my previous videos, you already know what that means, but in simple words, when moving up, the price should update its maximums, and moving down, update its minimums. The next point is priority. If several gaps are formed at once during the impulse movement, we are only interested in the very first one. For example, here we see that in the course of moving up, we have formed three gaps at once, but we will only look for the entry point at the lowest one. Well, in the case for the downtrend, we will be interested in the first one as well, but this is going to be the upper gap. Also, by trading on gaps, you can greatly increase the win rate by working with confluence zones, when the gap zone coincide with the previous zones of support or resistance. For example, in this case, we see that the zone that previously worked as a support passes right in the center of the gap, and the support level often turns into resistance after being broken through. In this zone, we have two levels at once, the gap and the resistance line. Okay, so now let's combine all of our knowledge and see how we're going to work with fair value gaps. So in this case, we see impulse on the top where we have the fair value gap right about here. So right here it started, and additionally we see that we have the second fair value gap, but since we are interested in priority and the top zone is going to be ignored by us and we're not going to put it on the chart, so let's look at the situation in general. So first things first, we are looking for the break of structure. Let's put a little mark right here, so the high zone right here the previous one, and of course in this zone we see the breakout structure. All right, and let's add it here. Buff. So additionally, besides of the breakout structure, we understand that this is our recent high and this is our resistance zone. So that means that if the price comes back to this level, it is possible that the price is gonna jump up because in the past that was a resistance and in the future it can be a support zone. So let's see what's gonna happen with the price. The price is moving slowly to our level. Let's make this doohickey a little bigger and see, we hear that candlestick, the first candlestick, reached our fair value gap, but pay attention that the price didn't close in the fair value gap, and that is the indicator for us that it's too early to enter into the transaction. We'll only do that after the candlestick is closed inside the fair value gap. So if it is there only with the shadow, we're not interested in that. Let's see what's going to happen next, and we see that none of those candlesticks were closed in fair value gap. And additionally, we see that our previous resistance zone now became the support zone. It worked once. So it means that this is a really good zone, and that means if the price jumps up and comes back again, the possibility that the price is going to jump back up again is really high. So the price is moving along and moves back up again, and let's see what's going to happen next. From here, the price is starting to move down slowly but surely, and let's see what's happening. Yeah, it's probably we started a bit too early, and right now this is a really great point for us, breaking through the level, and it's closed in fair value gap. So we broke the support line, broke through the support line, we are in fair value gap, and it is still too early to enter into the transaction because we need to see what's going to happen next. And the next candlestick is actually showing us the reaction, what we were expecting. And this candlestick shows us that the price is actually reacting to fair value gap and the price is going back to our support line. And from here we can enter into the transaction, and additionally we can look at additional confirmation, of course, and everyone uses different indicators. I use stochastic here. When we use stochastic, we need to see the blue line crossing the orange line close to oversold area, and that means that the price is probably gonna do a little reversal and move up, and after all of this confirmation we can enter into the transaction. So let's put a little line right there where we entered into the transaction and we entered for an uptrend, and let's look and we can see that the price is shooting up and moving. Let's summarize the results. For successful trading on fair value gap, several key points should be taken into account. So firstly, the validity of the gap zone. Before entering into a trade, it's necessary to make sure that the gap zone has not been tested before. Pay attention to the presence of confluence, a combination with the levels of support and resistance. Secondly, this is an entry into the transaction. Expect the candlestick to close inside the value gap zone, not just the shadow. Watch the price reaction to this level, and additionally you can use indicators such as stochastic. Remember that trading is an art that requires understanding and analysis. Follow your strategy, learn from your mistakes, and don't forget about the risk. Make sure to watch my latest video where I explained the topic of market structure, and it turned out to be fast and really informative. And that's gonna be it for us for today. Thank you so much for watching, and I will see you in the next one. Bye bye.